What if I told you that money, the thing you work for, save, and depend on, hasn't represented real value for over a century? That today, the global economy is not built on gold, goods, or even productivity ... but on debt. Every paycheck you earn, every loan you take, every government policy announced, it's all part of a system that quietly replaced tangible value with promises, interest, and illusion. But here's the mystery. When did this shift happen, and who benefited from it? This is not a story of economics, it's the hidden evolution of power, the secret history of how debt became the foundation of the modern world. To understand how debt replaced real value, we have to go back to a time when money was something real, when it was backed by gold and silver. For centuries, gold was the ultimate measure of wealth. It couldn't be printed, forged easily, or inflated away. Empires rose and fell depending on how much of it they controlled. But as global trade grew, nations faced a problem. Gold was too slow. It couldn't move fast enough to match the speed of commerce. Banks offered a solution: paper promises, or banknotes, that could be exchanged for gold later. It was meant to make trade easier. Instead, it opened the door to one of the most powerful financial transformations in history. Because soon, these paper promises became trusted more than the gold itself. And once that happened, the game changed forever. The first great experiment began in England. During the late 1600s, the newly formed Bank of England started issuing paper notes in exchange for gold deposits. It looked like progress, but something subtle shifted. For every ounce of gold held, the bank issued multiple notes. They realized people rarely came to redeem their gold all at once. So why not lend more than they actually had? This was the birth of fractional reserve banking, a polite term for creating money from debt. Each loan created a new deposit. Each deposit justified another loan. Suddenly, the amount of money circulating had little to do with the gold backing it. Fast forward to the early 20th century, central banks emerged across the world, each one built on this same principle. They didn't just manage money, they manufactured it. And with that, real value, something tangible, was slowly replaced by confidence. But confidence is fragile, and when it cracks, entire economies crumble. By the time the US Federal Reserve was created in 1913, the foundation was set. Governments had realized something extraordinary. They could fund wars, projects, and empires not with gold, but with credit. World War I was the first test. Nations borrowed unprecedented amounts, printing promises backed by future taxes and productivity. Gold was suspended. After the war, debt didn't disappear, it multiplied, and with every crisis, more control was handed to central banks. Then came the pivotal moment. August 15, 1971. President Richard Nixon announced that the US would no longer convert dollars into gold. Overnight, the dollar became a pure fiat currency, its value backed by nothing but government decree and public trust. That was the moment real value officially died. From that day forward, every dollar, euro, or yen became an IOUA claim on future labor, future taxes, and future productivity. Debt wasn't a tool anymore, it was the system itself. Once debt became the backbone of money, everything had to expand. Credit, spending, speculation. Governments learned that they could buy short-term prosperity by printing and borrowing more. Banks discovered that the more debt they created, the more profit they made through interest, and consumers. They were told this was normal, that taking on debt was the only path to a better life. But debt grows faster than real value. It compounds like a virus. By the 1980s, the global financial system was addicted to leverage. The more central banks tried to stabilize it, the more distorted it became. The came 2088 crisis born not of greed alone, but of mathematical inevitability. The system built on ever-expanding debt finally hit a wall of reality. Yet, instead of resetting it, governments doubled down, injecting trillions in new credit, creating money digitally out of thin air. The cure became the disease. Today, global debt exceeds $315 trillion, 3 times the size of the entire world economy. Think about that. The planet owes more money than it could ever produce in real value. But who is it owed to? That's the trick. Because in a debt-based system, money and debt are 2 sides of the same coin. When you hold cash, someone else holds a liability. Your savings are someone's loan. Your country's growth is someone's interest payment. And the more the system grows, the more dependent it becomes on endless borrowing. That's why governments can't stop printing money. If they do, the illusion collapses. It's not inflation that scares them, it's deflation. Because deflation reveals the truth, that the value we think we have docently really exists without debt expanding behind it. Politicians promise reform. Economists talk about balance. But every solution has made the system more fragile. Quantitative easing, negative interest rates, digital currencies. Every one of these is designed to keep debt circulating, never repaid, never reduced. Why? Because if debt were ever settled in full, the entire structure of modern money would vanish overnight. You can't remove debt from a debt-based system any more than you can remove code from a computer. It's the architecture. The tragedy is that real value innovation production labor has been buried under layers of speculation. We no longer ask, what is this worth? We ask, how much can I borrow against it? Today, digital money and central bank digital currencies, CBDCs, are the next phase. They promise convenience and stability, but behind the curtain, they extend control. Because in a purely digital world, every transaction can be monitored, taxed, or even reversed. The final step in replacing real value with programmable compliance. Meanwhile, inequality grows. The richest 1%, those who own debt rather than owe it now, control more than half of all global wealth. That's not a coincidence. It's the design. Debt is not just an economic tool, it's a modern chain. The more you owe, the easier you are to control. And the world keeps spinning on this illusion of prosperity built, not on value, but on promises that can never be fully kept. So, what can we take from this hidden history? First, real wealth is created, not borrowed. Anything that can be printed endlessly is not truly scarce and, therefore, not truly valuable. Second, every financial system that replaces real value with debt eventually collapses under its own weight. It's not a question of if but when. Third, awareness is the first act of independence. When you understand how the system works, you stop being its victim and start becoming its observer. The warning is simple. The next reset may not look like a crash, it may look like convenience, stability, or digital progress. But behind it will be the same pattern: control through credit. So ask yourself, when everything you own is just a number in a digital ledger, what's it really worth? If this opened your eyes to the system that shapes our lives, share this story. Because truth, once known, is harder to erase than money ever was. This is the secret history of how debt replaced real value. Subscribe for more deep dives into the hidden forces shaping our financial world.